Welcome. This is Tax Pro Nation, the home of the independent tax professionals, where you can find a tax community, maximize your earnings, and live life on your own terms. I'm your host, Imelda Ledesma, COO of Pronto Tax School. In this episode, Andy and Glen will lead the conversation with balancing a balance sheet. When all the information is not provided, you do the best that you can with what you have.
Hey, everybody. So we've been doing, as most of you guys know, this business tax preparation process document, and kind of especially with regard to S Corporation tax prep. We're trying to build out like a full process that we can all use and customize, depending on your needs. But one thing that we want to be looking at as we're working on this process document is like real questions from you guys about like making sure that these training sessions are not just like an information dump like from us, but it's actually stuff that you're using in your business, and really like testing and refining what we're trying to provide here. So with that in mind, I received, if you don't mind, Glenn, I'm going to share my screen real quick to bring in Payosha's comments.
Okay.
Give me just 1 second here. We had some great questions come in from Payosha, one of our members that a lot of you guys know. And I just want to bring those questions up real quick for discussion and see if we can kind of work through some stuff together. Let's see. Okay, and so can people see the screen here, the document?
Yes.
Okay. So Payosha, if you can, we have it here, kind of like what you have in mind, but maybe
I did one late, I think in like November, and I was having a problem, I guess basically doing a Schedule L.
Yeah.
I said M1, M2, M3, but it was a Schedule L. Just trying to balance that, the balance sheet inside of the tax return. And I have to go back and review this return for one or two reasons, because I want to make sure that everything was done correctly.
Yeah.
So,
Yeah.
but it's one of my biggest pain points, is because I don't know how. I'm looking at it, I don't really know what the heck it's asking for.
Yeah.
I don't know, I can't view it as balanced or not.
Yep.
And that's hard for me. And especially with this particular client, you know how we talk about basis and everything. This person basically he gets paid. He gets paid a check as a 1099, and he set it up as an S Corp. He's the only employee.
Yep.
So he doesn't have any equipment. He doesn't have, I mean, when I literally say anything, just his paycheck. So I'm looking at it as he no longer has any basis. So I don't even know if I'm doing that correctly. But if he doesn't have any basis, that means he has to pay taxes on the distributions and everything that he takes. That's what I'm thinking in my head.
Right. It's like by far the most common pain point. I think like everybody, Sean was saying on last week's session that 10 out of 10, it doesn't balance. So like, this is something that's not particular to you by any means. It happens to everybody all the time. And so if we, I was thinking we could just take a look at the actual Schedule L real quick, like in person while we're on here, and just, make like a clear idea of what we're even trying to do, like you said. So let me pull that up. So here's the 1120S. Can you guys see this on your side?
Yes.
Okay. So here's the 1120S, right? This is going to be, all of the first page, right? Like here's the, gross income, sales, right? Here's all the expenses, the different expenses. Here's going to be your net income down here. There's some other pages that, are important, but the, as Payosha is noting, this page right here, the Schedule L, is the one that really, trips us up in a lot of cases, right? So what's happening here, first of all, is So at the beginning of the year, right, the assets of the corporation conversation, but let's just say like based on a true story type of thing, right? So if you take last year's tax return for a particular client and you look at this balance sheet on last year's tax return at the end of the year, what is the relationship between those figures and the client's accounting records, like if they have any, or what are their accounting records? Does that make sense?
Yeah, but this particular one, the accountant didn't do anything for the balance sheet. It was like his first partial year of doing an S Corp. So last year I did the first full year. So there was no information.
Okay, so is there any account? So is there any bookkeeping? Like, is there anybody doing QuickBooks? Is there an Excel?
He's doing it on an Excel sheet.
Okay, and does he have an Excel sheet that says, here's my income and then here's my category of expenses, like a Schedule C type expense sheet? Is that right?
No, it did not have that. So basically, I helped him with the Excel sheet for 2022.
Okay.
So for 2021, he had nothing.
Okay, but he filed an S corporation tax return.
Yeah, but it was a partial one, and then even though it was supposed to be a full year, the accountant, they did a partial year Schedule C and then partial year S Corp.
Okay, and the S Corp was under 250,000, so there's no balance sheet on that tax return.
Right.
Okay, so that's kind of what I mean, right? Is like, we as a professional, you're getting frustrated and I would get frustrated because it's like, I'm getting stuck on this. But like what you just described is you're not having the information that you need in order to not get stuck, right? So just realizing that, like, from a logical point of view, is like, if you don't know the starting balance sheet for the current year that you're doing a tax return for, it's going to be very difficult to get it to balance at the end of the year because you don't really have any confidence or any reason to be confident in the accounting that's been done. Right. So you have a situation that is just completely jerry-rigged, that you're then trying to MacGyver yourself into a balanced balance sheet. Right. So that's okay. I mean, we just want to like.
And then I'm already like a little discouraged with doing them, so that makes it just worse,
Yeah, I would suggest to, and that's kind of the point I'm trying to make, is that the discouragement factor, I think, is more of something that you can choose to let go of. Because if you logically realize that if you are being given something that that is not sufficient to do what someone's asking you to do, then that's not a deficiency of you. That's just a kind of like life situation that we found ourselves in. And I don't think it needs to like stop up the work and make it like impossible. And so we'll work through in this example like how to deal with that, because that happens all the time. But just like between me and you, if you're being asked to do something and you're not being given the information you need, it's like, okay, well, now we got to play like Jenga or make together, like, put this here and figure this out. It's doable, but it's not surprising right then that would be potentially frustrating, because you're trying to do something that you're not really being provided the information you need. Does that make sense?
Yes.
Okay. So let's say, and that's the case, you don't have the information that you need from the prior year. Did the prior year tax return have a net profit?
It did.
Okay. And then what was that net profit? Just give me like a not an exact number, but just an example.
Something like $50-something thousand.
50,000. Okay. And was there money in the bank account at the end of the year?
You mean like basically on that December statement?
Right. At the end of the
it was something
year.
Small, like maybe like $2,000 or $3,000.
Okay.
Because
and is there
this
loans?
is his only income. Mm-hmm.
Is there like loans on the business, like credit card, debt, and all
Nothing.
that?
It's as straightforward as it gets, as far as no loans, no equipment, no depreciation, nothing.
Okay, so because I know you're a very intelligent tax pro and person, so like between me and you as business people and you having your own business, So if somebody makes 50,000, they don't have other debts. And then at the end of the year, let's say they have, for example, 5,000 in their account. What do we think that the distributions probably are? 45,000,
So
right?
yeah,
Because
yeah,
if I made 50,000, so let's say I had 200,000 in revenue, right?
yeah. I'm gonna pull this
Okay.
up.
And
Yeah,
then I spent to make that money, I spent 150,000. So now my bank balance is 50,000. And then I took out whatever, unless I got other loans or I put in more money or something like that, which you're saying this is like a straightforward situation, basically.
yeah. It
What's
just takes it
common?
all out.
Yeah. So like whatever your ending bank balance is, if you are forced to kind of jerry rig something, that's how you can kind of puzzle it out. And you could actually just get on that level with the client and say, hey, based on this, this is what I'm seeing as a business person myself. It looks like you made around 50K net. You had a you had a balance at the end of the year in your bank account of 5,000. So it looks to me like you took out 45,000 for your distribution from your profit. Does that sound about right to you?
Yeah.
Right. So and so that's basically like it's a way of I hate to say being casually figuring it out, but it's a way of you're all you can do as a professional is do the best that you can with what you have, and the person has to file a tax return regardless, right? They don't have to you don't have to get everything perfect. It has to be to a point where it's a legitimate tax return and the person agrees to it, they sign it, and you feel decent about it. So that for me, for this situation, would meet that standard as long as the client says, hey, that is accords with my version of reality.
Right.
Does that make sense?
Yes, it does.
Okay. So let's say just for sake of example that is the case where you have addressed like the previous year situation as best you can with the information you have. And people too, like everybody that's on here, if what I'm saying is wrong, doesn't make sense, or you just have something to say about it, like by all means jump in. But I've just been through so many of these type of situations. I kind of like I really recognize overall that the person has started a business, they basically aren't doing their accounting. They don't really know what's going on. They're looking to Payosha to try to help them. So we're going to puzzle out together and see that if I made 50,000 in the prior year and I have 5,000 left in my bank account at the end of that year, I probably, unless there was other loans, so that might be a question that like when we look at the process thing here, the questions that are asked to the client at the beginning has to address the types of things that you're going to need later. So like it feels sometimes with these kinds of clients, you're like, I don't want to like overburden them with too many complications or things like that. But you have to have something, because this is going to happen every time, right? If the person doesn't have accounting, the balance sheet is not going to balance. So like, we need to ask them questions like, did you put more money in during the year? Did you take out money during the year? How are you doing your accounting, if at all? Right? Those are things that we have to know because it's going to impact things later. So assuming that there was no more money put in or loans taken out or that kind of thing, and it's just flat, like, hey, keep it simple type of business, the person's retained earnings for after that year, if they have 5,000 in the bank account, their retained earnings will be 5,000, right? And their bank balance will be 5,000 to start the year. So that's gonna balance, right? That's gonna be their net income. Now, if let's say they put in Payosha, they took from when they were on Schedule C, they funded the S Corporation bank account with $3,000. And that's part of why they still have, let's say instead of 5,000, now they have 8,000 in the account. So that may be, capital or paid in capital, 3,000, right? And retained earnings, 5,000. Bank balance, 8,000. And that's going to balance. So that would be your starting balance sheet, right? Would be.
Got it. Mm-hmm.
Right. Cash is going to be Let's say it's 8,000 just to make it interesting. Okay. And then you're going to have paid in capital here. Hey, you told me that you put in to start the business 3,000, and then you retained of your earnings, you left 5,000 in to like fund the next year's like operations to start the year not at zero money, right?
Right.
So does that make sense so far?
It does.
Okay. So that some variation of this is going to be the way to arrive at the beginning balance sheet for somebody that hasn't been doing a balance sheet, right?
Okay.
So if you could, Glenn, I don't know if you have access to this, easy access or not, but the simplified S corporation basis worksheet that I have in the I think it's in the tax business templates course, or maybe a member could grab that and put it in here. But let's say you have Payusha, a company that's been doing business for 5 years, but they've never made over 250,000. And they haven't been doing any balance sheet.
Right.
Right. How would you puzzle out what that would be? That worksheet that hopefully either Glenn or a member can post into the chat here would be a way where you could kind of reconstruct, okay, this is what the basis is because, they put in this much and then the net.
I think it would be the statements, right? The starting from the beginning,
right?
The bank's statements, the ending statements for each year.
Yeah, but
I guess the beginning one for the first year and then the December statements for each year.
Right. And not just the bank statements, but so if you look here, like at the top, right, this top section is assets, right? Okay. And then there's liabilities or capital. Yes. of capital, right? So capital could be put in or capital could be taken out as distributions, right? And then liabilities could be like some companies don't have any liabilities. Other companies, they took out an idle loan for 100,000, right? And that's how they're getting their distribution is they're pulling out of the loan. So like from the past years, in order to do the beginning balance sheet, you have to make some reconstruction of those happenings, right? That have happened in past years, right? Like you have, okay, this is how much capital was put in 2020. This is
you
how
have to
much
trail those events.
Right. And if the person doesn't have that, they don't have that, or they don't have the means to pay you to like go into doing that, right? Then you're in a position of basically guesstimating, okay, based on your bank balance essentially, right? And whether you have loans or not, right? And how much money that you've been taking out. And so if you are that's what I mean by the communication with the client is like, I was the same way. So like I said, I'm not saying this to be critical, but it's just like, it's not your fault. That's an important thing. It's the fact that when you're doing a business, especially an S corporation, you're supposed to be doing your accounting. You're supposed to be like doing your accounting, and that's part of like having a business. So it's not the most fun part, but it is part. And so if somebody's not doing that, that's actually something that is the client's concern.
Thank you for joining us. I'm Imelda. Join us next week as we continue to share mini audio clips of step-by-step S Corp tax prep process. If you are interested in listening to the full process and want to be part of our Dream Team community, please visit prontotaxschool.com or email us to support@prontotaxschool.com. Being part of the Dream Team membership comes with getting expert support, top-rated training programs, and weekly video live events.